right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all here, and let's get this bias chart done. Let's all right, let's get through our morning analysis and get ready for today's last NFP of the year. All right, so what has happened today? So what we've done is we have rallied to resistance. Sorry, I did not mean to do that on you guys. My bad. My bad. It just comes out. It's Friday. My wife last night, she's like, "Hey, I made all these plans, and I'm gonna have friends come over and blah blah." And I had to nix that one really quick. I'm like, no, I can't. I'm gonna sit my butt in front of my TV, and I'm gonna grab a beer, and I'm going to fall asleep on the couch and slobber on myself and wake up in the middle of the night and crawl into bed. That's what's going to happen. I'm not entertaining anybody. I'm so tired. This week has kicked my ass. I don't know why. Maybe it's coming off of a shortened week, and I'm just like, man, I'm so tired. She's like, yeah, we're going to do this and that, and all these people are coming. I'm like, nah, no, you guys go find something else to do. I can't do it. No, thank you. Because all I'm going to do is yawn on people. Yeah, like I do with you guys in the morning. Anyway, okay. So look, euro dollar rallied right into our resistance zone. That's the resistance zone. Now we are dealing with 107.10. That's the breakout point. Now we do have, just in case. Now I do have to take obviously the Italian referendum into this idea here, but we do have an inverted head and shoulder pattern still. We're losing our symmetry, but if you think about, like, this is a 4-hour chart, so today goes by, and then come Sunday, they vote yes, the euro rallies, maybe it rallies a little bit. Okay, on a yes vote. I don't know. Renzi stays, and we go higher. Maybe this is the case. Anyway, I think after beginning of the week we lose our symmetry, but it's still set up. Possible. It's possible, but 107's big. I'm just going to write that down. 107.10, 1.0710. That's big resistance. Any which way you slice it. Now, if we have a weak jobs report, market's looking for about 180,000 jobs, give or take. Let's say we have a weak jobs report. We create 150,000 jobs or 140,000 jobs. If the euro spikes up to 107, you might use that as an area to sell into. I might. I don't think I'm going to stick around. But if we spike up to 107, I might actually short. I might short a little bit myself on a weak number. But we'll see. We'll see what the price action looks like at that point. Support on a strong number. I agree with what Paul said earlier. If we have a strong number, the euro drops to 106, or let's say in this case 105.80, are we going to be well supported? Probably, because I think people are going to try to curb the euro exposure in any way, shape, or form. So if people are short, they're going to try to cover up some shorts down here if we get down here, and if they're long, they want to get out of some, all ahead of the referendum. So I don't think we're going to pop out of this range before the weekend, but I may be wrong. I mean, obviously, but that's what my thought process is. So if the euro actually gets down to, let's say, sub 106, I'm going to write down two levels. Well, I'll write down 105.60, and then we'll write down 105.80. I think both levels will offer some sort of support. So 1.0560, 1.0580. I think that those are areas that offer support on any dip pre-NFP. Now, I do think that we are bearish. I'm not comfortable buying the euro. I'm more comfortable selling the euro. So if it dipped down to 105.60 or 80, I may buy it, but I'm more apt to short it. You know what I mean? Just because I know we're in a really nasty downtrend. I just know that we're also pivoting off of very, very critical support too. All right. Okay, let's go over to the cable. Bottom line is with the euro looking to fade any significant strength today, either direction. I'd be more happy to short euro strength though. All right, so here's the cable. Sorry. Um, Here's the pound. So yesterday, a couple of you guys, I noted actually several of you guys shorted the pound yesterday, and I wasn't even paying attention. I was focused on the yen pairs and what was happening in bonds and the Nikkei and equities. So I wasn't even looking when we popped up to new highs and we hit that 126.75 and reversed. A bunch of you guys actually shorted up here at resistance. I'm really proud of you for doing that. It is and was the 50% retracement. It was big resistance. We all knew that, and we hit it and reversed. So for those of you that really traded off of it, that's great. I don't know if you're going to be as lucky this time around, because if it's a weak number, we might actually bust through it now. You come up here and you test this resistance once. You come back and you don't even dip far enough for traders who are short to get out, right? You don't even dip far enough for them to get out. The risk is that we pop above those highs and actually break those highs now. I'm going to write down 127 as resistance today. On a weak number, we might actually blow through it, is what I'm thinking. Now, on a strong number, obviously 125.30 is going to be support on the way down. Easy peasy, nice and cheesy. Okay. I have zero cable exposure at the moment. Zero. And we are in a range. All right. Stretch. Okay. Let's go over to the Swissy. All right. So here's the Swissy. So we had this trendline support yesterday, and boom. Wow, we held it, right? And we talked about if we break this trendline support, we're going to parity. And this is where I ultimately hope, this is what I hope happens. I know I talked about, oh, shoot. Hey, can you guys hold 1 second, please? Just stand by just a minute. Thank you. Okay, guys, sorry about that. All right, so, we were talking about the Swissy yesterday, and talking about ultimately, I'd love to see the Swissy, come back to parity. I'd love to see it shake out the longs. Is that going to happen? I don't know. But I'll tell you what we have done. We have pivoted off of that support that we drew yesterday. When we drew it yesterday, I said, oh, this trend line's probably going to hold. Well, it did overnight, which makes it that much more critical today. So if we break through 100, here, I'm going to write down parity, right? 1.00, oops, 090, okay? So if we break this 1.0090, then we'll probably go down and test parity. I think that would be a nice shakeout, personally. Now, if it's a strong number, we're going to race back up towards that 102. I mean, obviously, 102 is big resistance at this point, 1.02, okay? It's still bullish. It's bullish well above parity, too, as well. All right, let's go over to the dollar yen. Here's the dollar yen. And so the dollar yen, in my opinion, is testing very key support. Well, did overnight. Okay, you can probably just do this. I'm going to grab the tip here, do that, and even though we this is a zone, right? Even though we broke, this is resistance. We broke through that resistance. This reminds me a lot of the U.S. equity markets. You know, the U.S. equity markets are very similar to what we're dealing with right now, where we got everybody long. Now, question hold. Like I said, I've got a short dollar yen from yesterday at 114.40. All right. I don't. I don't. I am going to hold on to it through NFP. And it may be the wrong thing to do, but again, I'm looking at bonds and I'm looking at equities, and I've got enough juice built into it where I can risk it. If I get stopped out, or if I lose some money from here, it's not going to be the end of the world. But I made some good money the last couple of days, so I don't mind doing that. All right. The flip side is if we break down through here, that's going to create some selling, especially after a 1,300 pip run. You got to think about the value proposition of this trade at this point for people who are getting long. We've gone from 101 to 115 in 3 weeks. So if you're still buying up here, you got to think about how much higher you're paying up for this. So you can see the reason why we're getting tired. Now, I don't think that this uptrend is done. Matter of fact, I actually am looking to get aggressively long the dollar yen on a dip. Okay, and I'm not playing that big of size going counter trend, but I am very well aware that if we break down here, we probably will have a couple hundred pip move lower. All right, you can start looking at, if this was the peak, even a 24% retracement takes us back to 111.50. And 110 is the 38% retracement, or 109.60. This level. So I would personally love to get aggressively long down here. The question is, have we peaked yet? And I don't have that answer. But I do think that if we break new lows today, so what are the lows here? 113.59. I'm just going to write down 113.60. I think if we break through 113.60, then we can say that the temporary top is in, and then now we can start looking for dips down to 111.50 or 109.60 as places to be long. Okay. There is obviously still a very good chance that we rally to 115.50. That is the 618 on a weekly and monthly basis. I'm not ignorant to that fact. Okay. I'm not ignorant to the fact that we can't rip up to new highs one last time. I am looking to sell at 115.50. Okay. Even if I get stopped out here and take a little bit of a loss, if we go up to 115.50, I am selling. I am a seller up there. So I agree with what Paul said earlier. It's like, okay, well, everybody knows it's going to be a strong number. So what's the difference? We're going to raise rates. It's a given, right? So you look at the dollar yen. If we pop up here, we're probably going to make another run for 114.80. 85, and then beyond that 115, whoops, 50, which is mega resistance. And yes, the dollar yen is bullish. Make no mistake about it. It is bullish. All right, let's talk about the Canadian, because we do have a Canadian jobs report, believe it or not. Don't want to forget all those people up north of where I live. Yeah, we have a Canadian jobs report. And guess what? The CAD is, now, you've heard me say, as long as the Canadian is above 133, it's bullish, right? You've heard me say that probably about 1,000 times over the last 2 weeks. Hey, as long as we stay over above 133, it's still bullish. It's still, hey, it's above 133, it's still bullish. Well, it's still above the, look, we're basically at 133. Okay, we're basically there. Yeah, you can argue with me. Well, Blake, we're at 132.92. We've been below that. Yeah, whatever. We're basically there. Okay, it's a zone. If technical analysis was a precise, methodology, then we'd all be gazillionaires. Unfortunately, there is no preciseness in technical analysis. It's all a zone. So we're around the 133 area. Okay. While we're around the 133 area, we're bullish. We get below here, it's going to shift gears. So that low comes in at 132.60. Okay. 1.3260. Okay. It's still bullish, guys. Now, the one thing that you have to pay attention to is that, with crude oil, really stalled at that AB equals CD 161% extension at $52 and, horizontal resistance. It's come off. So at this point, you know, that just, if crude weakens a little bit here, the dollar Canadian could pop up. Now, Canada has had surprisingly good data recently. I think a lot of people have been, myself included, have been kind of shocked at the good data that we've seen out of Canada, which is impressive, to say the least. And maybe that's one of the reasons why the Canadian has held up so well. But it is, the jobs report. So if for some reason we get above 133.55, we will squeeze. Okay. All right. I'm going to put you guys on hold for a few minutes. I'm going to go grab some more coffee. Don't go anywhere. All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Happy NFPD. Happy Friday, CGIF. We're going to finish up our analysis here. So let's go over to the Kiwi dollar. So, and yes, the euro is at new lows on the session. So, which shouldn't be too surprising. That just tells you how heavy the euro is, ahead of this referendum, which, in my opinion, is, you just want to sell on the strength, right? You get the euro dollar rallies to 107 today on a weak number. You probably just want to sell into that strength. Here's the Kiwi. Let's go ahead and delete that right now. And we stopped at the 618 yesterday. So let's go ahead and just grab that yellow line and pull it down here. Now, it was interesting, the euro or the Kiwi, we broke through this 50% retracement. We started to sell off and we hit the 618, but the dollar weakness that came in yesterday, allowed for the Kiwi to pop back up. I think the Kiwi is in a tradable range at this point, even though I still believe it's bearish, and I still believe that we have a longer term head and shoulder pattern in play. What we have here that we're dealing with is being able to sell on any move up to 71.70, and then if we break through 70.40, then that's going to be extremely bearish for the Kiwi. But I think that if you're short, you can probably look to cover down here, right? Something like this. And if it rallies up to 71.70, then you can look to trade it to the short side, something like that. I'd be more inclined, obviously, to buy dollars. So any move up to 71.70, I'd be a seller. But I think there's not a whole lot going on in this cross at the moment. Whoops, 0.7040. I'm still typing with not my pointer finger, my middle finger, so it doesn't work quite as well as. Yeah, you know, my middle finger. But anyway, let's go over to the Aussie. So the Aussie. So we have this bear flag still, in play, if you will. But obviously the dollar weakness didn't allow us to break through the support yesterday. So 73.60 is still support. 360. Okay, that's key support because if that breaks, then that's going to expose a move to the downside. Now, what could happen here was we could test the underside of this trend line. So any move up to 74, 74, 74, 65, 74, 70. Think you got to use that to sell. All right. Still on a bearish trend. And let's go over to the dollar index. Okay. Now the dollar index. Now we came pretty damn close to this 100.50. Now remember, this is a breakout point, guys. If the dollar index breaks through here, we are going to see a sell-off, and I would say it'd be a fairly significant one because everybody's long the dollar right now. Everybody's expecting, it's a big bullish breakout. Everybody's expecting it. Now, what people, don't realize is we just hit the 618 on a monthly basis and a weekly basis. But, most people just see it as, oh, look, it's a multi-year breakout. I'm getting long. Dollar's going to rally. So the risk is that we could pull back before launching higher. I think that the dollar is going to be a very messy trade going forward. I still think ultimately we'll be trending higher. I just think it's not going to be your clear-cut breakout. If I can envision what I think the dollar is going to do over the next 6 months, or a year, it's going to be like this, maybe up, maybe down, then, new highs, shake people out, it's like that. I don't think it's going to be pretty. Okay, I just don't think it's going to be pretty. All right. Well, but what we have to pay attention to, obviously, at this stage in the game is 100.50. If that breaks, dollar is going to be in some trouble. Okay, 100.50. Resistance. This is the 618, so 100.10180, and I think you got to be really just careful with the euro or at the dollar at this stage in the game. You do. It's not an easy trade. The FX market is not an easy trade. The FX market, nothing in the FX market right now is easy. The trends are, the dollar's too bullish to be shorted, even though I shorted some, but it's also too overbought to be bought. You know what I mean? So it's a kind of a quagmire, if you will, as far as how to position yourself in the dollar. It's not easy. All the easy money has been made. All the easy money has been made because all those people that were, short the dollar, a few weeks ago, they got screwed, and we got to play long the dollar big time and bigly. But now it's not so easy. Now it's just not very easy. Stand by. All right. Peso. So, um, Central Bank Governor Carstens, he's retiring. That goosed the the peso. Peso came under pressure. We spiked up. The fact of the matter is the peso actually looks pretty constructive. You look at the Turkish lira that's hitting new lows against the dollar, and some of the emerging market currencies that are just getting steamrolled right now by the dollar. I wouldn't be surprised if the peso actually spikes up to new highs. Now, you guys know ultimately I am shorting the peso. I'm very excited about shorting. I mean, let me take that back. I'm buying pesos. I'm going to short the US dollar Mexican peso. I am not clear on where I'm going to do it at this point. I haven't pulled the trigger yet. We are at a 618, so here's the thing, this 890, which is the 618, you can see it right here, or 890, I'm sorry, I'm thinking I'm Nordic currencies right now. 2090, that's resistance. If that clears, we might challenge highs, okay? It's big, okay? Support, I mean, say support's right here. It's the zone, right? But I'm gonna write down support as being chia. Oh, you know what? I saw a Donald Trump chia pet for sale. There was a TV commercial. Chia, chia yesterday. I thought, how funny is that? You can have a green Donald Trump head, or a Donald Trump head, and then grow green chia. Chia. 2068. I'll write down as support. It's not great support. It's just I think that we got support down in that area. Still bullish. Chia. Chia. All right. US dollar, Norwegian krona. So we wrote down yesterday support it being right there, and boy did we reject it, didn't we? Think about all those poor suckers that were getting short, and then all of a sudden, right off of that support. 50% retracement, 839.83. So 840 is support. It's big support. Resistance. Resistance. Where's resistance? I don't know. I don't have much desire to trade the Norwegian krona right now unless crude oil takes an absolute nosedive. But the flip side is also if crude breaks out above 52 bucks, I think you have to short it here. So if you think crude oil is going to break 52 bucks, maybe you want to be a seller right there. Chia. Okay. Still bullish. Although we did dip back below this trend line. See, I may have misdrawn this too. I mean, you know, I might be looking not what the market's looking at. The market may be looking at that. Because we got more touches here. Touch there, touch there, touch there, versus only 2 touches here. You know what I mean? So I was looking at it like that, but I may be wrong. It may be like that. Food for thought. Okay, all right. Swedish krona. Tim said, "I'd love to buy a Blake Chia." grow me a Kaepernick afro, a chia fro. That'd be cool. Half Chinese guy with a big afro. That'd be awesome. Um, Chia. So this trendline support obviously is strong. So we'll have to just do this for now. But this is getting a little dicey because we come down and break through this trendline support, and you might see a little bit of oomph come out of the Swedish krona. You do realize that the Swedish krona has had a massive multi-year breakout. I mean, this is massive. Yeah, I wouldn't be surprised to see it pull back a little bit, with the dollar index. I don't know if that's really great support, but I'll write it down. 917. It's trendline support. It's still bullish. All right, ladies and gentlemen, ladies and germs, your bias chart is finished. So let's chia.